Hey, all your traders, good morning. It's Tuesday, March 2nd. So we're the second day into March, last month of the first quarter. Some good news, right? This morning, we've been talking about, right? We're a big consumer based economy, and that's really the key to this recovery, right? Reopening. It's not just so much getting people back to work as it is creating that flow of money, right? And a big thing that's happened is we've seen it over the COVID, right? Retail. We talk about how important retail is to our economy, and it is. We've talked about the good thing is top level retail held strong right during the shutdown. But as we come out of the shutdown, we need to see the next level start kicking up, right? And so when I say that, what I'm talking about is like your Amazons, your Home Depots, your Walmarts, right? They were very well protected during this COVID, right? They were stayed open when everybody else had to shut down, blah, blah, blah. So what we need to do is we know they grow, right? And they've been growing, right? Even with everything shut down, they grew even more when it was shut down, right? Because everybody's forced to eat, shop there. Um, we need to see the next level. And we saw today, this morning, right? We had Kohl's report good earnings, Target report good earnings. Now, these are your next level retailers, right? They're not your big boys. They're fairly big, but they're not your Amazons and your Walmarts and your Home Depots and your Costco's and stuff. It's a good sign. It's a good sign. Then when you uh, combine that with last week's unemployment reports, right, starting to show a little bit of life, good news for the economy. That might also be too why you saw that tick up in bonds, right? If you remember, that tick up in bonds happened right after those unemployment reports, right? The bond market looking at it as growth too fast, creating hyperinflation scenarios and things like that. Now, I wanted to talk to you guys just briefly about the Fed, because I've been talking about the Fed almost daily with this bond buying program, their treasury buying program, the 2 years. You know, eh, the accommodative policy, at some point with inflation, you have to step off that. But there is an alternative for them, right? And we've used it a couple times in the past, our Fed Reserve. I believe around 2010, 2011 was one of them. And in the early 60s was the other one. And what it is you're buying these short-term the Fed is buying these short-term 2 year treasuries, right? Hand over fist to keep liquidity in the markets, keep the markets buoyed up and stuff like that, right? And it's worked up to now. But like I've talked about it, you're creating a heroin addict. The Fed is the dealer and the market is your addict. What you can do, and what the Fed will probably consider because it's worked in the past, is what you do is you start selling those 2 years because your yield curve, your curves have gotten out of line. You need to bring them back in line, and you've pushed them out of line because you're buying so much of the short terms that the long term got out of whack. All right, you're firming up one market while another one's running banshee. What happens is you can start selling those 2 years. The Fed can start selling those 2 years and start buying the longer treasuries and start bringing that curve back into line. The only problem with that, guys, is it's still stimulus. It's still artificial. Really, in that example of the heroin addict and the drug dealer, is all you've done is taken the heroin addict off the streets and now put him on methadone. It's another addiction, just a different addiction. And so it'll be interesting going forward because the economy is starting to show strength. And good things are happening now. Look, guys, tomorrow we've got the private payrolls on Wednesday, and then we've got the big payrolls on Thursday. So let's see how those kind of shake up. We're still being a little cautious. We did open up a trade on Apple yesterday, guys, for you guys following along. If you look at that chart, Apple's been very lethargic during these last rallies after their last earnings. They had fantastic earnings, right? $1 billion quarters and stuff like that. Billions and billions of cash in their bank account. But the stock never reacted, right? The stock just kind of went into a sideways pattern. First, it sold down a little, then it went into a sideways pattern. Well, yesterday it started catching up. And it's been a lagger, and Apple's usually a leader, right? In fact, it is the leader in the market. So a lot of people still say how Apple goes, the market goes. And so it looks like it's catching up. So the chart got real bullish. So we took a little poke at it. We still got that little VIX play That's just right off profitability. And then we're going to keep that spider puts, guys, you guys that follow along. You never know. Tomorrow could be a train wreck, right? Remember what happened last time we had an unemployment report, right? We had a good unemployment report and it shocked the bond market. And then the bond market just turned the stock market upside down. So we're still trading cautious, guys. Now, we're going to do our stock of the week a little bit later today, okay? And so we'll post that in a separate recording on the page. So if you guys want to check back in the afternoon, it should be up. Right now, let's see how this market shakes out. Let's go take a look at where the market is. Let me share my screen here with you, cats. And we'll pop on over to CNBC. Let's do a little refresh to make sure we got clean numbers here. And you can see, well, you know, about an hour ago, futures kind of pushed down. They were down about 50, 60 on the Dow. Now they've kind of pushed back up. So we'll see. This is what I was talking about, guys, with you guys that follow the show, is we're kind of in this sideways pattern, right? And we're really, really in this fight. You can see it. It's gotten really discombobulated, right? Huge up day, huge down day, huge up day, huge down day. So we've been talking about the last few days, right, guys? Don't get too deep till you see a little resolution. So we're getting closer to seeing some resolution. But what I mean by that is follow through. What do you mean by follow through, Pat? Well, what happens is, you know, you get a big selling day, right? Like you got on Thursday, right? And then the next day you just get an up day. And so your plays just churn. And it's very difficult, especially with options, to make money, right? Unless you're trading day trading, very short term. We don't do that. That's a little too dangerous. So we step back. Now we're looking for resolution. So we're looking to see this thing break off that 395. We're looking to break, you know, they were all cheering and on TV yesterday. I saw it. Oh, three markets are closing at highs and blah, blah, blah. When we take out that previous high there, I think it's about 394.50 on the S&P. That'll be important. But the big thing is we want to see follow through with conviction on a rally or a sell-off. And we've had a massive rally yesterday, guys. So let's see if we get a little follow through today before we really get into it. And that's why we'll release the pick of the stock of the week. We don't like to call it the pick of the week. It's the stock of the week. It's something that, just like CCI last week, you don't have to go out and buy it right away. But if you want to accumulate it, build a position in it, it's a great stock for the long term. That's what we're using for our stock of the weeks. Something you can buy and keep for a long time and make money off of it. So look, guys, let's see how we shake out, right? I mean, everything's kind of in cruise control right now, right? Even with Washington and stuff. I get, you know, politics is politics. Let's stay out of that, okay, guys? I guess they're having some kind of trouble in New York with their governor or something. I don't know. And all these guys that were all virtue slinging a year ago are now under investigation and stuff. Right? You think about it, right? Think about the media darlings, right? Not even liberal or conservative, just media darlings, right? Michael Avenatti, Chris Cuomo, I mean, Whitmer. It's like, oh my God. Even Cruz, right? Ted Cruz, right? He got caught on that, caught with his leaving Texas. But you know, politics is the best reality show on TV, guys. If you don't take it too seriously, don't let it bother you too much. Understand that, you know what, there's not a whole lot you can do about it. Anyways, guys, we'll see how this stimulus 2 goes through. I guess it's still kind of at a standstill. I was trying to find some information on it this morning, but there's not a lot of talk about it. It's mostly talk about what's going on with Cuomo and stuff like that. So I don't know. Important information is always hard to find, right? But you know, if you want to know what's going on Twitter, there's about 18,000 articles about it. Anyways, guys, let's go ahead and see how Tuesday shakes out. Okay, guys, like I said, check back later in the afternoon and we'll be posting that stock of the week. We'll do a little separate recording on that so we can do a nice little presentation on it. Okay, guys, we want to build on what we started last week with that CCI pick. Okay, other than that, guys, trade cautious. Like I said, we've only got we added Apple yesterday, so we've got about 4 plays on the board, and we're looking to expand that as we see some conviction and some definition in the market. But for right now, all systems, we're right on the cusp on the VIX trade, right? The spider trade's kind of like a hedge right now. The Coke short we've got out to April. Coke is failing at the $50 like we expected it to, regardless of how much the market rallies. And we just got it to Apple. So you guys trade cautious out there. And don't forget, don't live and die on options, guys. I know we're an options trading company and stuff like that. And, options are a great way to make money, but make sure you got some long stocks in that portfolio. Okay. A little bit of beef. All right. All right, guys. I'll see you guys later this afternoon with the stock of the week. Have a great morning.